Hey, Terry.
Ben, Burkett, how are you?
I'm great. How are you?
I'm doing fine. I'm doing fine. I'm so glad you could join me today.
You
And
you
for
you
for
making
all
it
of those
okay?
for all those viewing, it is Ben Burkett with NFM Lending here in Richmond, office out by
Yeah.
Willow Lawn. Been
Yes.
in business for a long time, haven't you, Ben?
Well, gosh, it's been over 17 years.
Yeah. Yes.
Yeah, it's been a while.
Well, I'm so glad you could join me to talk. So let's do talk. Let's talk about how Corona is affecting us
Yeah,
in
it's
the
definitely.
lending and real estate.
Oh, yeah, it's definitely having an impact on everybody involved.
Yeah.
And I think our attitudes and our outlook need to remain positive. From the nuts and bolts of what's going on in the lending world. You've got, I think the biggest thing is, well, really two things. Overnight, after the coronavirus outbreak started to really have an impact on people either being furloughed or losing their job, there was a real idea that people are going to be either late on their mortgages and or maybe even worse. And I think what happened is that the appetite for low down payment or no down payment loans basically evaporated in a 24-hour period.
Got you.
And so what that means is that it changed the landscape of available loan options for new buyers, overnight. And all the loan officers out there that are giving advice to their customers had to pivot and come up with another strategy. And it's I know it's made things more difficult. And
Hmm.
this is across the board. This is an issue that's reached Congress, the Federal Reserve, and industry experts and those that lobbyists that are representing the mortgage industry have been hard at work trying to come up with ways to maybe bring those products back. And it hasn't happened
Okay.
to this point, but it probably will come back it seems like we're opening the economy in stages, and states have the ability to come back online, maybe in a three-stage or three-tiered type of approach. And maybe over the remainder of 2020, some of the programs will come back.
Okay. So let me ask you a few questions. So how do you think this affects maybe a first-time home buyer in the market?
Yeah, there's definitely people out there that have been looking and have gotten advice for some of these programs that are more difficult to obtain now. And so they may be a little reluctant to maybe pivot and look at other program alternatives, but they are out there.
Okay.
It may be that they need to work on their credit so they can maybe qualify for those that are available. What I would say is, if we're going to turn something that's a negative into a positive, it's a real opportunity to talk strategy and to come up with a way that people can either improve their profile so they qualify for a program that is available, and or potentially looking at stepping out of what most other people would consider, in that a lot of people are sitting on the sidelines waiting for this to pass.
Okay.
And I really feel like that if people step forward and they're able to get a loan and feel good about their job prospects, there could be opportunities out there for them to realize that the others won't be able to take advantage of.
That's what I'm thinking. It could be a very good opportunity.
It could.
So hey, I'm hearing a lot about that word forbearance now. Talk to
Yeah,
me about that.
if forbearance is basically a rework of a loan that's already closed and coming up with a way where people can not make payments and either tack them on to the end of the loan, or maybe make them due at the end of a certain period of time, like more 3 or 4 or 5 months down the line. I think
Okay.
lenders have come up with different ideas on how to handle that. Um, but I think that it caught the lending industry by surprise, because I think it was suggested and encouraged by state and federal officials. And I think the last time around in 2008, there was a provision that people had to show hardship to qualify for the forbearance opportunities. And that hasn't been quite the same this time around. It's almost like lenders are going off of, hey, we're having conversations with people and they can't make their payment, and we have no option but to grant them forbearance.
Okay.
And where I think lenders want to make sure that they are being helpful and helping their customers get through a tough time, it really puts a burden on those that have those loans that are making money from the servicing of the loans that are outstanding. And it really represents potential hardship to the industry as a whole, because they may be in a position where you have large scale servicers that are having a hard time staying in business if the number of forbearance requests keep piling on, week after week, month after month.
But let's say me as a consumer, if I needed forbearance, what's the first
hmm
step I go to? What do I
Well,
go to
so
my
I,
lender?
yeah, there's a little bit of a delay. Sorry about that.
Okay.
If you log into your mortgage company website,
Yeah.
my guess is there's going to be a banner on the front page to tell you what to do.
Okay. Got ya.
Yeah, so it's pretty easy.
Okay.
And I know that, a lot of them are talking about tacking on the payments to the end of the loan. As a loan originator, I know that most of these loans are sold on the secondary market for money that will be made in the first 5 to 7 years, because there isn't an anticipation those loans will stay on the books for 30 years. So
Okay.
that presents a problem. If you tack it on to the end, my question would be, what if you never make it to the end and you sell your loan? And I guess they end up adding it to the loan balance that's due at closing. But I just feel like that there's so much uncertainty, it's creating a place in the industry where servicers are a little nervous.
I got ya. I got ya. Now, let's say I am in Loan App right now,
hmm
and all of a sudden I've been furloughed. What does that mean to me
Yeah,
as
furloughed
a consumer?
is by definition people who have been asked to stay home without pay, but they haven't been laid off, so they don't have to reapply for their job. It would be something temporary. As far as the examples that I have seen come about, I know that people have been laid off and they've lost their jobs.
Right.
Furlough is not quite as bad, but it could mean that people are, at home living off savings and they're not being paid. The first thing that comes to mind are maybe some of the nurses that you've read about that have been furloughed.
Mhm.
Um, and that all that does is create a challenge for lenders to confirm what the ongoing income stream is to potentially repay those loans. So it does come into play.
Okay, so just because you've been furloughed, does that mean no loan, we're stopping, or it's a lot of factors involved with it?
I would say that with the help of to the way that I would approach it is,
Yeah.
if I had to talk to the individual employers, I would be looking for if typically furloughed means they're not being paid at all, but what's their plan of getting back up and running, how long the person has been working with them, what's the history, and
Okay.
what's the likelihood for them to come back, and if there's a way to explain the gap in the time frame that would help us have confidence they could repay the loan, that would help.
Got ya. Got ya. So what do you think long-term effects are
I
in our
think that,
industry?
yeah, I think that from a consumer standpoint, I think that as long as we can have some type of tiered reopening of the country, I think that people will be more confident towards the end of 2020. And I think the confidence that people have in the real estate market, Richmond in general, is very strong, very stable.
Mhm.
They should be as confident as they have been in the past. From a lending standpoint, I do think it's going to take a while for the low down payment or no down payment options. FHA, VA, USDA loans have all been impacted. There's also been this category of loans that are not Fannie Mae and Freddie Mac compliant. We call them non-QM, which is a term that Congress came up with back in like 2010. And those loans that rely on maybe bank statements instead of tax returns, they all disappeared overnight.
Okay. Okay.
So I think that maybe in the short term, the menu of loan options might be a little bit shorter.
Okay.
and that will end up opening back up over time as lenders are more confident about people making their payments and there not being any potential missed payments, at least on the front end or towards the front end of the loan when it closes.
Okay. All right.
And that,
So, but overall, you're still making loans
we're
and
still
people
making
are still
loans. We're
buying.
still giving good advice. We're remaining optimistic. And, my main message to people is I get your reluctance. I get how being cautious makes sense today. But let's stick that in a box over on the side just for a minute. And let's think about in life, if you do things that are different from everybody else, there are circumstances and chances for you to make opportunities out of uncertain times. It doesn't apply to everybody because the employment circumstances may not be as stable as they would like it to be. But you know what? Some people do feel very confident in their employment and they make opportunities. And what I mean by that is they step forward and make offers on properties and there's less competition. And they end up ratifying contracts on properties that they may not have had a chance to ratify contracts on previously. I think that's the big message.
I got
Is,
you.
is there a challenge for, to find what they want out there? Are people putting their houses on the market? Yes, that's all the challenge. But if there's something out there and they like it and they feel confident enough to step forward, they could be rewarded for their time and their effort.
And you know what? I want to end on that note.
That's great. Well,
So,
it's good. It's good
but
seeing you.
but Ben, I got to tell you, I'm so glad that we got to talk and educate me, educate my audience. So I so appreciate it. Ben
You,
Burkett with NFM Lending.
you are very welcome. Thank you, Terry. Have a great day.
Okay. All right.
Bye-bye.
Have a good weekend. Bye bye.
You too. Bye-bye.